The latest CNBC Fed Survey showing that the Fed chair race is heating up. Senior economics reporter Steve Liesman joins us right now with more. Good morning, Steve.
Morning, Becky. The Fed expected to hold rates steady at its meeting this week en route to an expected September cut, and respondents to the CNBC Fed Survey see a three-way tie in the race to replace Fed Chair Powell. I'll get to that in a second. Here are the Fed expectations. 100% said the Fed won't cut in July, but 27% think it should. That reflects agreement, perhaps, with two Fed governors who could dissent at this meeting. 65%, those see the Fed cutting in September, and 31% is the likelihood of a U.S. recession, down from 38 in June and 53 in May, after more clarity in tariffs and their impact. But 1.4% is the GDP forecast. That's up from 0.6 from the May lows with all the concerns about reciprocal tariffs. Here's the outlook for the funds rate. 4.4 is the current rate, goes to 3.9, that's two cuts. 3.5 next year, that's two more cuts, showing the Fed is still seen remaining, though, above neutral, or the 3.3% average long run rate, even through 2026. Who the next Fed chair will be is also anyone's guess here. Kevin Warsh, the former Fed governor, at 24%. Treasury Secretary Scott Bessent at 24%. Kevin has it just a little bit behind the 22. And Chris Waller, the Fed governor, who is one of those who might dissent, he's at 14%. Will Trump fire Powell early before his term is up? 84% say no. 11% say yes. What about policy and the Fed and the criticism from the president? Well, 30% say it makes it more likely the Fed will cut. 42% say less likely, and 56% say neither. Bessent has said the president could pick a new Fed chair as soon as December, but that's just a couple months earlier than either former Fed chairs Bernanke or Yellen were nominated. Becky?
Steve, is it weird that no cut this time, but then everybody assumes there'll be a cut the next time? That seems to be saying that while everyone's waiting for an inflationary impact from the tariffs, do they not really believe? If there is one, then why would you be able to cut the next time?
And recessionary expectations are coming down.
Yeah.
So why would you be more likely to
It's
cut?
weird. It's like, oh, we're saying we think there might be inflation, but we don't really believe it, and we'll cut in October.
You know, Joe, I've got two things to say about that. First of all is, as a reporter, I've always maintained that if you can think of the story today, you ought to do it today, because you'll be late if you do it tomorrow.
Right.
And I think you're kind of getting at that, which is if you can foresee the preconditions for cutting interest rates today, why don't you do it? And I can add a little bit to that from the survey, which is that now you have more of our respondents are convinced that the tariffs will be a one-time price hike rather than broader inflation. It's like 51% to 43%, but that just got above the 50% level. Let me throw something a little bit weird at you, maybe a little abstract, which is maybe it's the Fed's tougher actions and waiting that will keep the tariff inflation from spreading and becoming broader inflation. So the idea of let's wait and see, let's be tough here, and let's be sure that this doesn't spread is the reason why it wouldn't spread.
Wow, that's delusions of grandeur for the Fed, but we know they suffer from that anyway.
Okay. Well, I mean, if you're going to say that inflation is low now, isn't it their policies that got us there, just like they messed up back in 21, 22?
Maybe.